This is our Forex blog for March 20th, 2013, and I'm doing today's blog a little differently. I'm showing all 8 individual currency pairs. These are our currency indexes, which I created, aren't available in any other retail platform that I've seen. And basically it shows the dollar versus all the other pairs, the yen versus basically all the yen pairs, all the dollar pairs, all the euro pairs, all the pound pairs in chart format. What's nice about this is you can very easily see the trend. You can see the euro, clearly the trend's up. You got a nice trend line. You can draw trend lines off of both to get it a feel for where the market's going to stall to upwards part. And for the last 6-7 years, we've been pioneers in terms of tools that measure statistically how strong or weak each currency is. In fact, people use our currency meter, such as this FX trend intensity on the dollar, the euro, the pound, to see statistically how strong or weak each pair is. I personally think it's even easier to just look at the currency chart because you can see actual tradable patterns that are repeatable. For instance, the point of control line right here, when it acts as support and the price starts to break out, it tends to continue up. Previous day's high of my dollar index. Typically, breakouts of these tend to act and cause big trends up, but when they don't, everyone rushes in to sell at the same time, and right around 5:30 right here is a great place to sell. Once a support area gets broken, it tends to act as resistance. Hourly moving average in gray acts as resistance. These are all great places to sell the dollar, especially after 5:30. So the euro's clearly trending up. It's above its hourly moving average. It goes above the point of control. This is the price that most traders have positions in all the euro pairs at. Above that, you want to be buying. Below it, you want to be selling. And sometimes it's stuck between the point of control and the hourly moving average, and it tends to go sideways until it breaks one or the other. Sometimes you have a currency like the Swiss that the point of control is right near the hourly moving average, and once it kind of breaks out right here at 8 o'clock, it's a pretty high probability buy. And you can see the dollar is in a likely direction down as the Swiss is breaking out to the upside at 8. So these are some of the high probability trades you can do. You want to sell the dollar Swiss at 8. Sometimes you only make 5 to 15 pips, and other times 20 to 50 pips. But the point is, it's a very high winning percentage trading model, and the losses, especially when you use range charts, I only have the 5-minute up on this one right here, but you can see coming up to 8, it's underneath its hourly moving average. Our perfect oscillator is showing an extreme overbought situation right here. And most of the time when the price hits, and my perfect oscillator does not use periods, and one of the reasons it's so good is because you can see that found the low right here, the market went sideways for half an hour, right here, price pretty much bottomed out, found the high right here, that was the end of the move. And usually when it goes below the 80 level, you're due for a nice little bounce, which you can see there. It went above the 80 level here and then went sideways for almost an hour. So that's one of the reasons I call it the perfect oscillator, because in those times where you see an extreme overbought situation in a trend that's down, it's high probability. So at coming up to 8 o'clock, the dollar Swiss was overbought. The trend is down, and it was a very high probability sell based on the actual chart patterns. Let's look at some other trades on here that you might have taken. The New Zealand, it found support at the previous day's low right here. Now clearly it's in a downtrend. This is just a counter trend trade. But when it tries to go below yesterday's low and can't over a period of half an hour to 2-3 hours, typically it's going to go the other way, as traders who are short are all rushing in to cover at the same time, or when they realize the trade's not working, they go the other direction. So the New Zealand here, nice buy. You want to find one that's likely to go down. At 2 o'clock when this starts going up, you can see, actually a little bit later than that, the yen is underneath its hourly moving average, and it breaks down and starts to head down. And so the New Zealand's likely to go up, the yen's very likely to go down, and that means we want to buy the New Zealand yen. Now I'm just going to make this the whole size of this. We don't need range charts on this to show how to use it. Coming up to 2 o'clock, as you can see on this chart, This one also has a nice little slightly higher low rectangle pattern. I mean wedge pattern. Breaks out at 2, and this would be your first profit target. Typically, counter trend moves come back up to the hourly. They if they stall there, then they break the lows. You want to look to sell there. This one broke from underneath to above it, but notice how our indexes pretty much found the low of the New Zealand yen today. And if you're a longer term trader, you would have pretty much got in right here with your stop underneath the low. You're risking less than 10 pips. And if you held it to the high, it went up to 98 around 10. What's beautiful about this is you have the potential of astronomically big wins while risking tiny, tiny amounts. I mean, not all trades are going to give you 100 pips like this. But like I said, typically you're going to find 20 to 50 pip moves. And since I have this chart up, let's just go over some of the extremes. This one's at the perfect oscillator was at an extreme low. Extreme low, notice it was done going down. It's at an extreme high right here. Right on this bar, actually right here. Went up a little bit more and then kind of went sideways for a while. It's at an extreme high right here. Notice that was the high of the move. If you're a counter trend trader and you just use our perfect oscillator, you would have caught that move. You would have caught this move. You would have made a little bit on this sell right here, and you would have made 15 to 20 pips on that one. And that's why I call it the perfect oscillator, because in my trading experience, it's 70-80% accurate. And those times where it's wrong, all you got to do is just simply draw your fibs on there and wait till it gets to the fib target, and you'll get your loss back typically on the next trade. That's my own personal opinion, but watch it for yourself and come up with your own conclusions. We're releasing a new version today, and one of the new features, as requested, is we have something called auto-locking fibs. So when you draw it from a particular bar to another bar, it locks on there. These are synthetic symbols. They don't exist anywhere in nature. I create them myself mathematically. And so our fib level, trying to lock onto these prices, it wasn't actually on the chart. I'm drawing these myself. So the fib levels, the auto-locking feature didn't work before. Now they do. When you hit Control F for fib, or you click the T and then the fib tool, when you draw your fibs on here, they now work. And guess what? These are extremely predictive in terms of coming up with high probability areas where the market's going to stall. I'm just going to draw a few of them on here so you can see for yourself. Never take anyone's word for anything. Always, see it for yourself. And fibs are kind of an art, but they don't always work. And sometimes it goes past the first 1.382 and goes to the 1.618. However, just take a look at them. This level right here was giving this fib area. The fact that the dollar came down, wasn't even able to hit the fib area, found support at the previous day's low, pretty decent place to be buying the dollar. You can see in the euro, the first 1.382 fib area got hit, and when the market went sideways, it rallied up to this, and that was pretty much the end of the move. This is a great place to look for sells, especially at the 1.618 in the euro. Notice the Swiss hit the 1.618. This one, pretty much a pip or two off. This one found support at the 1.382, went sideways, didn't bounce off of it, came down to the 1.618 and did bounce. And of course, the yen here, which was one of the weaker ones today. Let's put this one on here. Draw your fib off of this little swing here. And ta-da, the 1.382 was a great place. Now, let's take a look at how you could profit from these counter trend trade-wise. Obviously you want to be buying the euro, you want to be selling the yen. The euro-yen, no-brainer one to be buying today. Euro-yen is just going to be going up all day, as you can see. Especially when the euro was clearly trending up, the yen was trending down. You might have bought this breakout from underneath above the hourly, bought this pullback right here. And I always like, when I see a trend and I get a pullback, if the perfect oscillator is near the lower containment bands, I like to get in. Also, if it hits the -80, I like to get in. Look at these two beautiful buys. And that's why I call it the perfect oscillator. But getting back to that counter trend trade there, the time is at 9:30 or so, and this is the euro is likely to have found a high for at least an hour or two. And so if you find a currency at 9 to 10 that's likely to retrace and go the other way, let me remove all the lines on here. Sorry, you can go onto the toolbar here and delete all chart lines. There we go, they're all gone. All right, so then the fib area of the euro also happened to be the previous day's high, another reason why it was likely to reverse there at 9:30. Let's see one that looks to be strong at 9:30. Well, the pound just broke out from below to above the hourly at 9:30. That's a trend that's likely to continue up. It's above yesterday's high, whereas the euro failed to hit yesterday's high. So I would say at 9:30, the euro pound's a good one to be looking to sell. And of course, you got a nice little pullback right here. And guess what? That trade works as predicted. Let's go back and look again at one at 9:30 that's likely to possibly bounce. All right, here's one. This one, the yen has been going down, but it also has a nice little double bottom right here, and it's breaking out of the trend line over the bar's high. I would say around 9:40, the euro yen is one that, at least on a short-term counter trend scalp basis, is one that you could probably make some money on selling. So here's 9:30, and guess what? This trade worked too. Now the only downside here, and another benefit, is it's at the upper containment band, the 1.5. I prefer to sell at the 2.0 level. The only downside of this is, it's not at the extreme perfect oscillator overbought or at the Bollinger Band of this indicator. However, one of my trading methods that I use is divergence trading. Anytime you have a double top, slightly higher high, where the perfect oscillator shows a lower reading, that's actually predictive of a pullback. And this is one excellent example of, if we use the range chart, anytime you're doing counter trend trading, it's a little riskier. Let's put the euro yen on here. This is a 5 pips per bar range chart. It's not based on time. I just want to showcase how the range charts look. So on this range chart, at 9:30 you're looking to sell this. You might have actually gone short right there. And again, you're doing counter trend, so be really careful. Anytime a currency goes my way and comes back up and is not able to go down, I tend to trail the stop down. I would have maybe made 6 or 7 pips on there. It rallied up, wasn't able to go back up to the highs. I'm going to go short again, and again, just kind of eyeballing it. When it goes down and goes sideways, I put my stop. I might have got hit right here, and you got another pullback right here. You go short. I would have probably got out here with 5 or 6 pips and missed this last move. And once it tries to go down a few times, it doesn't make any significant moves. The euro was strong and very likely to go back up after a pullback. You can, when you find these counter trend trades, you can do a trade or two counter trend and then look, flip and buy and ride it up. This trade right here at 10:30, it happened to be at the yesterday's value area high, which is a very high probability place to be buying. At 10:30, let's take a look at the perfect oscillator. In fact, it hit the lower Bollinger Band here, got a little bit of a bounce. And when you're trading counter trend, you might want to be watching this. Coming up to 10, you can see it was at a likely extreme because the trend was up coming up to 10. So when this thing was going sideways right here, you might have actually made a few extra pips, 5 or 6 extra pips by watching this. Anytime this hits the lower Bollinger Band, most of the time this stays inside the bands. And so when it hits the upper one, it comes back down, especially when it's with the trend. Clearly this is an uptrend right here. It's at the lower Bollinger Band, nice little pop to the upside because the trend's up. So never ignore the Bollinger Bands on the perfect oscillator when it's with the trend. In other words, if the trend's up and the perfect oscillator is hitting the lower band, you might want to consider getting out of the trade and even looking for longs. And again, that's why I call it the perfect oscillator, because it has so many uses, and statistically it's just amazing. Look at how that 80 level got hit. Found it pretty much at the end of that down bar and you just bought and had a 5 pip stop, you would never have got hit, and the market went up about 60 pips. Not many tools allow you to have 5 to 10 pip stops with many good examples of 20 to 50 pip moves while risking 5 or 6 pips. I mean, that's just unheard of. And that's why I call it the perfect oscillator. And that's also one of the reasons why I'm pretty much trading for a living now and not really focusing too much on the business, because these tools, for me, the way I've been teaching them, have been working exceptionally, beyond my wildest dreams, actually.